Hello, this is John Mark Gray. We are going to talk about financial markets in this video, namely stocks, and the stock of the day is Pfizer. An interesting sector is the healthcare sector, along with energy are the two beaten down sectors in the market and probably represent the best place to still find value in an obviously overpriced bubble market. At any rate, the healthcare sector has massively underperformed relative to the S&P 500 over the last several years, as the AI trade has sucked all the money out of many underperforming parts of the market from housing to healthcare. Although lately, whether due to short covering or some rotation out of the AI trade, healthcare has experienced some bid off the bottom as fund flows are finding their way to other parts of the market in the broadening trade. This brings me to the curious case of Pfizer. How in hell does the CEO still have his job? Dr. Albert Bourla became the Chief Executive Officer, CEO, of Pfizer on January 1, 2019. That's 7 full years. When Bourla took the job in 2019, the Pfizer stock was roughly $36 a share. Today, as we finish his 7th year as CEO, it is approximately $25 a share. Yes, it pays a dividend, which now stands close to 7%, which is never a good thing for most companies. Again, I repeat, how does Dr. Albert Bourla still have his job? He is close to 65 years old, and the age factor alone should signal a polite resignation on his behalf, as he is simply stealing money from the company at this point, given the extremely poor performance of the stock since the COVID highs. Nevertheless, it is definitely well past time that this guy is forced out by the Pfizer board. Which brings us to the Pfizer board. You have a fiduciary duty to the shareholders of Pfizer, the broader market by comparison, since the start of 2019 through late 2025. Data varies slightly by source, but generally reflects strong growth. The S&P 500 has shown significant gains, with total returns often cited around 170 to 200%, or roughly 16 to 17% annualized, factoring in dividends reinvested, with impressive yearly jumps in 2019, 2020, 2021, and a strong finish to 2025 after a dip in 2022. Therefore, it is obvious that the Pfizer board is incompetent, and it is also apparent that a strong activist is direly needed in this company to clear out the entire board and upper management of Pfizer, I mean the entire C-suite. A thorough and complete house cleaning should be the objective for any new activist campaign in the name. Moreover, an obvious question for a company with so many employees. Pfizer has approximately 81,000 to 88,000 employees. What are all these employees doing, and why the pricey acquisitions for drugs? Where is the in-house research and innovative pipeline of new drugs, and why the continual need to seek external sources to replace legacy drugs headed for the patent cliff? If this is the model going forward, growth through acquisition, then A, it isn't very cost efficient, and B, it would seem that there is a lot of existing fat to be cut from this bloated behemoth from a financial engineering standpoint. This year Pfizer overpaid for Metsera, went to the debt markets for more money, failed to raise their dividend for the first time since 2010, and failed to materially raise guidance for 2026. All signs of a poorly run company from a finance perspective, and this points to poor management at the top. The buck always stops at the CEO level. This is why they get paid so well, to perform under pressure. For instance, the CEOs of Starbucks, Nike, and Boeing have all been replaced over the last year or so, and it amazes me that a serious activist hasn't gotten involved in this company yet. As Starboard's effort was an absolute joke, pure amateur hour, but someone like Elliott Management, who is active in almost every other underperforming stock in the market, seems like a good fit. As there just seems like a lot of low-hanging fruit to be picked in Pfizer as a serially underperforming company. This obviously starts with cleaning house with a wholly incompetent board and CEO, both of which have completely destroyed shareholder value over the last 7 years, but especially Dr. Albert Bourla during his tenure as CEO. It is time for major changes at Pfizer. Notably, in light of Pfizer's CEO Albert Bourla being paid nearly $25 million in total compensation to completely destroy shareholder value during his time as CEO, the board of directors should not only be ashamed of themselves, but the entire board of directors for Pfizer needs to be shown the door as well. It would be one thing if the stock market was in a 7-year bear market, but the stock market is at record highs, and Pfizer has lost value as a company. That's plain hard to do in our hyperinflationary world, kicked out of the Dow in 2020, and been a total disgrace for shareholders' portfolios. It is high time for a substantial change, a new CEO for Pfizer in 2026.